But we'll today talk about what to watch out for in the budget and also aspects of the market which you may not be looking at on a daily basis. We have Sahil Kapoor of DSP Mutual Fund joining us on the show today. Sahil, afternoon. Thank you so much for your time. Sahil, before I come to your observation of the market, we are at the point, right ahead of the interim budget. However much we may say that, budget barely matters for the market, but it's a platform where, the commentary coming from the finance minister would have reflection on the market, important data points containing to the, economy, etc., will be shared. From the market standpoint, Sahil, what are one or two numbers very keenly the market would watch out for in the commentary, in your view?
Sure. So Ajay, as you said, it's a vote on account, so I don't think there will be any drastic changes done. But two numbers I'll highlight which are important. First is the overall expenditure. I think that is going to be an important message. How far and strongly is going to government is going to go on the path of fiscal consolidation is something that the street would want to know. Although the annual fiscal deficit number is anybody's guess, right? But the glide path is very, very important. What I'm interested in the expenditure number is about what kind of capex does the government promise. So last 2-3 years, they've been growing capex at about 25 to 30%, a very large number. Before COVID happened, we used to spend about 2.5-3 lakh crores of government expenditure on capex. That number has grown to about 10 lakh crores last year. Can this number go to 11.5, which is about 15% jump, much smaller than last 2 years, but I think that is what the street is expecting. So there will be a slowdown in terms of last 2-3 years capex expenditure. That is the incremental increase, but the overall number is going to be closer to that number. If the number is below this number, I think there will be questions asked about the sustainability of what we've seen for the last 2-3 years. So this is the first number that I'll be looking forward to, expenditure, and within that, what is the capex that the government is going to announce? The second is going to be the gross market borrowing. So expectation is that this year that number will be held steady. There will not be a large change. We will be closer to 15.5 lakh crores. So not a big jump in terms of overall borrowing that the government will do. That will more or less, give more credence to the GSEC market, give RBI more cushion room, more elbow room to cut rates during the year as inflation numbers have already gone down. So I think that demand and supply of bonds will be crucial numbers. So I think these two are important numbers, other than, of course, the tax-related changes, if any of them are announced, which I have no idea, but those will also be crucial. But because it's a vote on account, expectations are low of any major announcement.
Mm-hmm. Well, Sahil, just attempted to ask one more question about policy environment-induced positiveness in the market. Because, it has been one of the factors. The continuity of reforms is something almost every strategist talks about regarding the Indian market. There is some amount of premium built in for the superior growth of, which we are witnessing in our economy, and policy environment has a role to play in that. But everybody is questioning or wondering that in the new regime or the next couple of years, what are the areas of reform which are left to be taken up? There's a lot of work happening in Capex, railways, defense, financial digitization, etc. Which are the areas which could be next, in your view, where reform work can be taken up, or progress can happen in?
Sure. So, Ajay, I think there are 2-3 important areas. One, when I look at policy environment, it is largely a reflection of what's happening in other emerging markets today. So I think from that sense, India comes out as a much clearer winner when you compare it to, let's say, other emerging markets where policy environment has been a lot more challenging. So that continuity should continue. That means investors would expect that there are no new surprises, so to speak. That I think is one of the best outcomes. Second, of course, the government has to focus on employment situation. That I think has been a big focus over the last 5 to 7 years. Largely that has to translate into numbers going ahead. So there has been a focus over the last 3 to 4 years specifically on manufacturing. That I think in some areas has started to build up in terms of numbers. If those numbers can be scaled up and employment can be created in those areas, particularly, for example, electronic goods manufacturing and brown goods manufacturing, if those numbers can be scaled up, I think it will be a very important piece to watch out for. As you said, I will not go into capex and infra spending. That will require continuity. which the government has already done. The third and most important area, I think is law and order in terms of the industrial complex. That has been a big challenge for India for a very long period of time. Setting up shop in India for international businesses, domestic businesses, and having a conducive environment to run those businesses. I think that's changing over the last many years. More work is required, and I think that will be an area where probably government will focus on.
Right. Sahil, let's come to Marcus then. For a while now, you've been maintaining that mid-cap, small-cap section of the market warrants caution. The valuations, in fact, the gap to large caps are not only narrowed, parts of small-cap, mid-cap are now trading at a premium to large caps. Do you maintain that stance? But within that, which are the areas of the market where you see the quality of earnings are keeping up to the valuations or even marching ahead and hence have margin of safety?
Sure. So Ajay, when you look at the overall market, look at 2-3 factors. One, when you look at the sales growth across the universe, and if you split them into sectors, you will see there are only two sectors now, consumer discretionary and BFSI, where sales growth or top line growth is above double digit or high double digits or 20% plus. In most other sectors, it has slipped below either at low double digits or mid single digits. That's the kind of sales growth that we are witnessing across sectors. But still, we are at a cusp where our margins or profit margins are at near record highs. So last quarter, we printed, I think, one of the best margins that we've done, or the second best margins that we've done at an aggregate level over the last 20 years since we have data. Sustainability of those margins is going to be a big challenge, and more so in mid and small cap. So when you compare historically the kind of earnings growth that mid and small cap have delivered over the last 3 years, the number is about 25%, and that has translated into very, very good numbers going ahead. But the margin expectation which is built in is that we are going to go higher than our all-time high in terms of profit margins. That I think is going to be a little challenging. So A, sales growth is slowing. B, we are already at peak margins. I don't know how far can we go ahead from here. So this clearly tells you that there is going to be a pressure on earnings growth in the next 12 to 24 months. But when you look at prices, I think they have run up quite a lot in mid and small caps. I was looking at the data that 2023 was the second best year for small cap indices in least number of negative closings, the calendar year. And if you go back and see top 5 of such years, which means they are very low volatile year, throughout the year, the indices are making a new lifetime high. The next year usually has been followed up with large declines. On an average, those declines, that means the drawdowns, peak to bottom, have been upwards of 35 to 37%. These are just drawdowns, not yearly returns. But on an average, drawdowns are small cap calendar year drawdowns are between 23 to 26%, right? So there is a large gap which has gotten built in terms of valuation. And another small point, if you compare India small cap, mid cap valuation to global mid and small cap, we are roughly 2.5 to 3 times more expensive if you compare it to other emerging markets. And if you go back to slowing sales growth and the peak margin numbers, I think we have a case where you could see more consolidation in this space going ahead.
Right. Right. So what should be the ideal portfolio strategy in your view? Suppose you were to put 100 rupee in the stock market right now. How much would be tilted towards large caps, mid caps, and small caps? And would you also have gold to hedge your portfolio?
Sure. So Ajay, this is a very personal question. Largely depends on the kind of investor that we are talking about. If we take a very conservative type of investor, I think he'll be fine with 35 to 40% equity allocation to domestic equity. You could also buy 10 to 12% into global equities because there are some opportunities available which are cheap and earnings are coming back. You could put about 20-25% in precious metal, gold and silver. That I think ideally could be a very good mix. So this takes you closer to about 75 to 80% of the portfolio. Rest 20%, you could put about 10 to 15% in duration play in India. I think it's a great opportunity. And what we spoke about the budget, there is a possibility that bonds could deliver very handsome returns from where we are standing today. And rest 4 to 5% opportunistically, you could keep in short-term, debt as and when opportunity arises, so that you can switch back to equities when valuations are more attractive.
Excellent. Thank you very much for joining us, Sahil. Always enjoy our conversations.
Thank you.
That was Sahil Kapoor of DSP Mutual Fund.